Well, good morning everyone, and welcome to this market outlook for this Tuesday morning, 2nd of August. Bit of a different time to be doing this. I usually do it at the end of the day here in Sydney, so evening, night. I was going to do an update yesterday, but just didn't. So here we are. So as we usually start with these outlooks, we'll start here with gold. And if you look here on the daily chart, what do you see? This big run up the last week. What we're projecting, we're looking for this pullback, this wave 2 pullback. This wave 1's over, remember? If we mark back this here, you got a wave 1. Oh, what's happening there? Wave 1, 2, 3, 4, 5 of 1. So now looking for this pullback, up into this area here, and it definitely looks like we have momentum. This big bullish bar here week before last, and we touched on that last update. Last week we continued that, moved sideways a couple of days, retested this 17.11.30 level before just taking off. And last week we made a significant move to the upside, 2.88%. Yesterday, Monday, continuing this move up, breaking above 1765, and now we're just continuing today. So look, this move's pretty significant. You can see the momentum's easily come and kicked in here. We've got 1, 2, 3, 4, 5, 6 bullish days to 2 down days. So that's pretty obvious that the bullish momentum's come in. And yes, it's been pretty bullish, so you'd expect with a significant few up days like that, we might move sideways a bit, possibly retest around here before then continuing. So test maybe around here, move sideways for a bit before then. In the coming weeks, continue up to as high as 1878.90 for that wave 2 pullback. And if you measure that from where we are right now up into the 1850 range, we're looking at another 4% up into 1878. We're looking at almost 6%. And just to get an idea why this is my target, if you measure using a Fibonacci retracement tool from the start of wave 1 to the end, you'll notice that 0.382, 0.5 Fibonacci lines up perfectly with that sort of region. So will we get a 0.5 retracement, which is common, or will we get a deeper retracement up into the 1900? Coming weeks will tell, but overall we can safely say that this pullback has started. We didn't continue lower into these low regions I was watching. We rejected quite significantly on this candle here, and we touched on that. You can see that it's very obvious. It's all displayed in that candle, and we've just continued. So continuation in the coming weeks up into the 1850s and possibly 1900s. Silver, much the same. They pretty much follow each other. So wave 1, wave 2, 3, 4, 5 of 1. So looking for this primary wave 2 pullback, which has come up. You can see with silver we had this price action which moved a bit lower, rejecting the 1843 region before the momentum really kicked in last week. Big move to the upside here of 8%. Actually more than that if we measure. 10% last week, big move. So will this cool off a bit before continuing higher? That's what I'm watching, and we're looking for a retracement up into 2150 region. So up here, let's get the brush, so up here, and possibly higher up into this region here, before then continuing with the wave 3, because once wave 2's over, wave 3 would kick in, and that would be continuation of the overall bearish trend to the downside. So just looking for this, possibly we'll come back down here, retest before then going up into 2150s. Oil, we were looking for this continuation to the downside last week, which has really only happened from yesterday. Last week we moved sideways, came up, rejected this region, and if you have a look here, you can see a gap right there, gap, close, open, and we wicked up into that gap, filling those prices in, and then yesterday significant bearish movement. Negative 4.8% day. So if we get another day like that, once we break these wick lows, I'd expect this move to continue as we've forecast in the previous videos, looking for this monthly retracement back into $80 and below, possibly as low as 50 in the coming weeks and months. UK oil much the same, won't touch on that, continuation with this retracement to the downside. The dollar index, now this is interesting. Was looking last video for this movement up here to confirm this lower high. It didn't go as high as I was looking, because if you remember, we're looking for maybe a move to confirm that lower high up into here in the 108. We never got that. We got this one bullish day here on the 26th of July before continuing this bearish movement, down day and down ever since, rejecting, break through this 106.358 to 106.239 level, cleared through 105.788. So looking for this continuation now back down into 101.622 to 101.297 in the coming weeks, this pullback, which you can see here on a monthly too. Now yields have fallen significantly. Last video we were looking for this continuation of the downside, which has happened. A few sideways days before the momentum's kicked, clearly breaking this low here, and now we're coming lower. So same thing, much like the others, monthly pullbacks. So will we get yields back into the 2% and lower? And remember, falling yields means money flowing into bonds, and bonds usually people invest in as for safety. They give low returns, but they're safe, and in a high risk environment bonds tend to perform well. And if this is primary wave 2 for the pullback, as we touched on, we're looking for TLT to come up into the 140s in the coming weeks. And you can see the last few weeks this momentum has just continued slowly and more slowly up to the upside, and we're confirming that more and more because we have broken above this high here and this high here. It's quite significantly yesterday. So that says to me that this momentum is really starting to kick in, and in the coming weeks we'll get this continuation to the upside in bonds and therefore falling yields. And just related to that, we'll go to the long bond. You can see this movement. Last video we were looking for this break above 143.21 and 143.00, and we've broken above and closed above that. You can see here that was the previous level, the swing, broke higher, before that cleared that, cleared that, cleared that, cleared that. So this pullback is happening as we speak, so bonds prices to continue to the upside. Moving on, Dow Jones. Now the stock market's been interesting. The last couple of videos, a couple of the areas I was watching, well, on all the indexes, prices have rallied beyond that. I was originally looking at these levels here, 31.875, and then a bit higher to close this gap before continuing that downside movement, but you can see we broke through that, we broke higher, and we're coming up to this swing high now. So still bearish, we're still making lower lows and lower highs. However, this pullback has just retraced higher than expected, and the next target area I'm watching is as high as 33,272 before we roll over. We may not even get to that. I suspect we're very close. This movement from 14th of July has been very bullish. If you measure that, 8.75% in how long? 18 days, so a bit over 3 weeks. But you can see once the momentum, because it is overall bearish, look how quickly that fell once we had this candle to there. 8.84% in 6 days compared to 18. So, you know, if that rolls over now, we could be back here in a week or two. And keep in mind, this will be wave 3 of 3 if that is to happen. But current level I'm watching is these previous highs back at 33,272. If we break higher of that, then we'll have to reassess, but for the time being we're still bearish, even though we've broken a bit higher than these levels I had marked out for a rollover. So just watching the coming weeks. And the start of the week we got a slight down day in the Dow Jones Industrial Average. Now the S&P, much the same. We were watching at these levels here at 40.40 for a rollover and 40.17. We broke significantly up through there. So next level I'm watching now is 41.77 for this rollover and continuation of wave 3 of 3 for that retracement to be over. And if you look, this is wave 1, this is wave 2, 3, 4, 5 of 1. So this is wave 2. And if you measure retracement tool from the start of wave 1 to the end, the 5 waves, that also lines up with 0.5 Fibonacci retracement, which is a tad higher. So let's see what happens. Nasdaq, now the Nasdaq has cleared these previous highs of June 2nd. Next level I'm watching is 13,165 to 13,225 for possible and possibly higher up into here, 13,400s, 13,500s, where we were in May, because there's a gap here before continuing to the downside in the Nasdaq. You can see here we've retraced perfectly to 0.382, above 0.382, coming to 0.5 on the S&P on this weekly time frame, and coming up to 0.5 on the Dow Jones as well. So you can see that basically that means that the Dow Jones and S&P have been stronger, breaking through their 0.382s. The Nasdaq, even though it has broken this high, it's still not up near here like the others. And then last but not least, the Russell, this isn't even near the 0.382 yet. So this has been the laggard of the group of indexes, but much the same. We were looking for this pullback into this gap area here, 9th and 10th of June. We broke higher than that, and we're starting to slow. Will we get a move higher up into here, 1919 to 1925 before rolling over for wave 3 of 3. And the futures as of today, you can see yesterday we closed with this inverted hammer, which is pretty bearish. Gapped high yesterday, closed the day lower, and we open the day lower currently. So let's see what happens, eh? But I tell you what, looking forward to this wave 3 of 3. It seems that the majority of people think this stock market bearish movement for the year is over, and we will be seeing new all-time highs by the end of the year. But remember, when everyone's on one side of the boat, one side of the trade, more often than not the opposite happens, and that would make perfect sense. this wave 3 of 3 in all the indexes to start, so we continue with these bearish movements to the downside, and money flows into bonds for safety for that pullback. Gold and silver also. Volatility yesterday, we had an up day of 7%, so that's interesting, and we're still forming higher lows here, so I think at some point we'll get a significant squeeze, and high volatility is not good for the stock market, so that will also confirm that wave 3 leg down. And if we have a look here now at Bitcoin, remember Bitcoin and crypto in general, as we currently have it, is tracking the stock market as a whole. So if we get these movements in the indexes down, I'd expect crypto to sell off as well. You can see we've had small movements up, but really there's no Elliott wave here. It's sort of just equal size movements, and this says to me it's a wave 4 complex pullback. Ethereum broke higher, but much the same. XRP, just choppy sideways movement between 40 cents and 30 cents. We could see retracements up a bit high before then continuing, but people seem to be getting bullish too soon in crypto, so another leg down would make sense. Anyway, just a quick recap. Gold higher in the coming weeks, silver higher, oil lower, dollar lower, yields lower, bond prices higher, Dow Jones almost getting to the turning point, so I'm looking for that to roll over. S&P the same, Nasdaq the same, Russell the same. So yeah, keep an eye on that, guys. It's very interesting what's happening now, as always. Be measured and be poised and be prepared, and you'll be fine. Anyway, until next time, hope you enjoyed that. Take care. See you.